Hello forex traders, welcome to this amazing video. On this video I'm going to be analyzing all the pairs on this watch list: S&P 500, XEU USD and EUD USD, Australian USD, gold and S&P 500. Now what's happening on these pairs? First of all, I'm going to be starting with the one that is looking juicy. On my channel on CJFX, if you're new here, please make sure you click that bell icon so that each time I drop a video, you'll be the first to be notified. And if you have not yet subscribed to my channel, please feel free to subscribe to my channel. Now let's go to the AUD USD. Let's see what's happening on AUD USD. As you all know, I'm a top-down analyst using price action, you understand, and Fibonacci as my strategy. Now going to the chart. Now let's first and first, as you all know, top-down analysis. Now using the top-down analysis on the monthly time frame, first of all, what are we going to check? We are going to check for the direction of the market. Now as you can see, let's see what the past price has been doing or had done, or English. Now you could see market has been creating lower high, lower low, lower high. Now a lower low wanted to form, but it was exhausted. It now found itself above retest. It wanted to continue, but it couldn't. So this was all reacting on this trend line, showing bearish pressure. Showing what? Bearish pressure. You could see when market went up, reacted, came back to this zone, and you all know that one key take home, or anyhow you put it now, is that AUD respects round numbers. Now what are round numbers? Just like 2, 4, 6, 8, 10. Do you understand? All these in are round numbers. Now if you see very well, AUD respects it like its life depends on it. Do you get me? Now I'm coming. This my level is not well arranged. Thank God I saw it. Yeah, that's how I'll leave it. At least your level should accommodate as many touches as you can see. Do you understand? Now on the monthly time frame, we found out that market is on a trend line, bearish trend line. Do you get me? Bearish trend line, showing us that market is currently what? Bearish. So the direction of this market is what? Bearish. Do you understand? The direction of this market is what? Bearish. So all what we are going to be thinking on our head is what? How to catch the sell of this market. Now going to the weekly time frame, whereby we check for chart patterns, such like reversal chart patterns, such as the head and shoulder, double bottom, triple bottom, inverse head and shoulder, double bottom, double top. All these things are the chart pattern we always like looking for on the what? Weekly time frame. So let's go to the weekly time frame to see what's going on there. Now on the weekly time frame, we could see something like a head and shoulder. See a right shoulder. Let me see if I can get something to show you. Yeah, I'll use this. This is a right shoulder. Please take note. If you're that kind of trader that thinks that forex is very hard, you are wrong. You are wrong. Once you know top-down analysis, you are good to go. The next step you are going to be thinking about is what? Your entry and exit, because market is divided. The forex you are seeing is divided into three. You get me? It's divided into three. Your analysis part, market analysis, and entry and exit. Once you are good in market analysis, whereby you're talking about the top-down analysis, do you understand? Then the next thing you should be thinking about is what? Your entry and exit. Once these two are spot on, let me tell you the truth, you won't be fearing forex again. You won't be fearing any chart. You'll be able to analyze any chart that you want to analyze in the whole world. So far it has to do with candlesticks. You understand me? So this is the head and shoulder pattern. The head and shoulder pattern, left shoulder, neckline, head, neckline, right shoulder. What's going on here? Excuse me, pardon my this. So right shoulder, pull back. Are you seeing me breakout? Are you seeing breakout of the neckline, showing that the next target we'll be thinking about will be here? Are you getting me? The next target will be here. Now, since we could see a clear head and shoulder on the weekly time frame, not just on the weekly time frame, on a key level. Remember, there's a theory in price action that states that. I will advise you, if you're a price action trader, learn this. Learn what I'm trying to see. Jot it down, journal it, keep it, hold it in your head, and practice it. It will help you. Now, there's a theory that states that market move from what? Zones to zone. Isn't it? Now, remember on my past video, I said that the third touch of the trend line does the trick. Now, but you could see that market has been reacting severally on this trend line. Nope. This trend line is not well drawn. It's well drawn actually. Let me just leave it like that now, because it's actually on this tip of this part here. I don't want to force it, but let me give it space to breathe. Still is still doing what I want. Now we could see the head and shoulder formed on what? On a trend line. That is one what? Confluence. 2, it also formed on a key level. Now, how many times has this key level been touched? We have 1. Let me show you. We have 1. We have 2. Have been tested several times. We have 3. So this zone has been tested severally. That is the point I want to just make. You understand? That is the point I want to make. Now, there's another thing I want to explain to you, because I'm always transparent trader. Now, I will tell you something. Here is, what did I want to tell you? Okay, whenever you see something like this, a key level, not just a zone or supply or demand zone, a key level. This is a key level. Why do I call it a key level? Because anytime market comes to this zone, it always respects it. It must always respect it. If it breaks out, it must come back to test it. Do you understand what I'm trying to say? Now, let me use, for example, past data for you. Look here. Watch. Market came here, broke out, retested it. What? Went up. It was eyeing this zone, but because of this trend line, held it from reaching that zone. Broke out on a daily time frame, pull back. Let me go to the daily time frame so I will clarify this. Can you see? Broke out, retested back on the zone, continue. Now, this is the idea I want to make. I want to make you have, let you know. Now, on the weekly time frame, what do you see? You see a clear, bearish, strong, engulfing candle. So, our confluences. Now, okay, there's something I wanted to let you know, is that this is also called a Willy zone. What is a Willy zone? A Willy zone was first found, like all traders know about it mainly, but they didn't name it. So there was a man called Dapper Wills. He's also a forex trader. He's my mentor. Do you understand? It's my mentor. So he found it and he named it after him. So it's called the Willy zone because his name is Willis, like his Dapper Willis. So he now named it the Willy zone. So this is called a Willy zone. Whenever you see a zone, be it support or resistance, intersect together with a trend line, is called a Willy zone. Now on this zone, we also have a chart pattern, a reversal chart pattern showing us what? That this is 99% sure the market is eyeing this what? This zone. 99% sure the market is eyeing what? This zone. This zone. Are you getting me? So how are we going to take advantage of this? How are we going to take advantage of this? We are going to screw to the daily time frame to see if the daily time frame corresponds. I'm coming, please. I like making my chart look nice. All this, I'm going to be hiding it, letting be only for this, only to this time frame. I don't want it to be showing on other time frames. Do you understand? And this I want it to show below, current interval and below. Now on the daily time frame, the daily time frame is where we just come there, sit and wait for it to do its thing. What do we want it to do? We want it to, as it has broken, this just here, just this candle that broke out here, it's a daily engulfing candle. This candle has given us 100% telling us that market has what? Broken out of this. Market has what? Broken out of this. So what are we going to be expecting? We are going to sit here and fold our hands and what? Wait. That's why you suppose, as a trader, not just a trader, an institutional trader, because what I teach here is exactly what the institutional trader do. They do exactly. Do you understand? You're supposed to have the ability to be patient in forex trading. If you don't have, I'm telling you, you'll be rushed out of the market. A quality trade is better than a losing trade. Do you understand? If I can wait and in a month I get like 5 good trades and 3 are quality, I lose 1. It's better than those who took trade in a month 50 times and 10 are quality while just the 40 are wrong. Do you understand? Do you understand what I'm trying to say? So I don't want to make mouth, but that is how I trade. As you can see, the next video I'm going to be posting, I'm going to be selling my analysis on how this played out. Check my recent videos. Check them. When you watch them, go back to the charts and try to understand what happened to it. You will see that, yeah, all the pairs I analyzed went exactly as I said. If they didn't go, that means, you know, it's markets. They did their thing. But I didn't take it because market is classified and forex is classified into 2. Analysis aspects, that is the market analysis, and entry and exit. That means once I analyze the market and I see what market will do, and the entry and exit does not click, market do not click the entry and exit, I will not click the button to sell or buy. Do you understand? Now, on the daily time frame, what are we expecting? On the daily time frame, we could see the market has broken out. So I want a further more push to the downside. Then what will I be expecting? I'll be waiting for something like this. A daily pullback. The pullback must look exactly like something like this, like the past pullbacks that has happened. Do you understand? But it must be matured. I don't want a pullback that is looking steep. Is this steeper, or how do they call that in English? Something like this. That would be a fake out. I don't want it. If I see something as such, I won't trade it. No matter how juicy it may look, I won't trade it. This has helped me a lot. So a pullback to this zone, then what? A buy. A sell. Now, once I see something as this, I'm going to come here, take my Fibonacci, because I told you at first that what? I'm a top-down analyst using price action and what? Fibonacci. price action, trend line, Fibonacci. As you can see, that's what I do. Now, come here, take my 50 fib to the zone. Once it corresponds, that gives me a 99% mentality that it is going towards sell. At this point, I'm going to go to the lower time frame, such as the 4-hour time frame, waiting for a break of the CTL, 4-hour break of the CTL. Then I'm going to be catching it down to this zone. Down to this zone. I'm going to be swing trading it down to the zone. Down to the zone. So this is how I trade, and that's what I'm seeing on AUD, on Australia USD. Australia USD is eyeing this zone. Comment please. It's eyeing this zone. It's eyeing, what's the number around here? 0.61602. That's where it's eyeing. Believe me or not, but that's what's going to happen. Now back to our rest of our peers. As I stated earlier, I said I'm going to be analyzing each of these pairs. You get me? Each of these pairs. Now I'm going to be going to gold. On gold, what am I seeing? Let's go to the chart and see what gold is doing. First thing first, top-down analysis. Now, on gold, you can see that gold has been rallying. Gold has been rallying. Now, there's another theory in price action that states that to any impulsive move, there must be a consolidation, and to any consolidation, be expecting an impulsive move. Do you understand? Now, all this theory I'm telling you are the one that involve round price action. Now, what do you see? Market has been ranging. What do you see? Impulsive move, range, impulsive move, range, impulsive move, range, impulsive move, range, impulsive move. Are you seeing? Then another range, impulsive move. Are you seeing? So now, on the monthly time frame, gold has been what? Bullish, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now we go to the weekly time frame. Remember, the weekly time frame is here, is where we come to check for what? Chart patterns. If we don't see chart pattern, we work with our what? The direction of market structure, knowing the direction is what? Bullish. Do you get me? Now let's just use the current data on price, this thing. Now we could see market creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Let me take out this. I don't like my chart looking too much rough. Now, higher highs, higher lows, higher highs, higher lows. Now, did you see impulsive move? Range. It ranged for how many? How many went from April? When was the breakout? The breakout was August 25, from April to August. Did you see? It broke out. Then it now created an impulsive move. Now, this one that is here may look like it's looking like it wants to range again. It wants to range again. Do you understand? Remember the theory I just said now that governs price action. To any price action. To any impulsive move, there must be a consolidation, and to any consolidation there must be a what? Impulsive move. Are you getting me? To any consolidation, there must be an impulsive move, and to any impulsive move, there must be a consolidation for some period of time. Now, since we know the theory that governs price action, what are we waiting for? We know that market is currently doing its thing, ranging. But still as a price action trader, you can still what? Trade. There are two things you can do, but at the back of your back of your palm, or at the back of your anything and everything you're using, always put this at the back. Now keep it aside. Is that you are trading a ranging market, and when trading a ranging market, you have to be extraordinarily careful using proper risk management. If your risk management before was when the market was what? Skyrocketing. When the market was in an impulsive move, you should divide it into two. Now, if your risk management is 10%, such as me, just as where I use 10%, you divide it into two, making it 5% when trading it. Do you understand? 5% when trading it. You get me? Now, how can we take advantage of this? Now, using the theory of price action, that is market structure, higher highs, higher lows. Now, we could see market creating higher highs, higher lows. You understand me? Market created, now this is a higher low creating. So we are expecting market to move further to create a higher high. Do you understand? Market to create a higher high. We are just using basic market structure to trade this. You understand me? But still at the back of our hand, we kept this thinking that yeah, markets may start creating its ranging, because this is an impulsive move. This may be a ranging market trying to form. So since we found out here that market has created a higher low, what are we going to be waiting for? We are going to be trying to catch the uptrend. Now, how do we do that? We scroll to the daily time frame. The daily time frame is where we come to check for what? Tradable opportunities. Tradable opportunities. Now, on the daily time frame, we could see that market created this move upwards. And you know that anytime you see something as this type of move that is so steeper like this, be expecting a what? A fall. So this move will look like a falling knife strategy. You understand what I'm trying to say? So this move will be looking like a falling knife strategy. You get me? So what do we see here? Market went up on the 4-hour time frame, created a double top, broke out, you understand, with a bearish engulfing candle. So all what was in my head, on an honest note, all what was in my head was what? Catching this sell from this to at least this trend line here. You get me? To at least this trend line here. So, but you know that the market will eventually do its thing. You are not the one controlling the market. You only have how use the past data of price in the market to analyze the future of what may likely occur in the future. So, but what happened here? Market came here, created a bullish engulfing candle, went back down. Now going back up, broke out again with a bullish engulfing candle, came back to this neckline of the double top of the 4-hour time frame, and also on the trend line of the weekly time frame. Now what? Came back, creating this reversal candlestick, bearish engulfing candle. You understand? Coming back to this zone again, then reacting on this zone. You understand what I'm trying to say? So this stuff now is looking like a 50-50 tradable opportunity. Now, which rule am I going to use on this? Now, remember that all rules in price action always like move hand in hand. What did I say at first? Market move from zone to zone. Market substructure. We use basic market structure, higher highs, higher lows to predict the market. Do you understand? Now, but on this daily time frame, market created a lower low. This is higher high, higher low. Now market is supposed to create a higher high. But what are we seeing? We are seeing like market is getting exhausted. Remember I said this is looking like a ranging market trying to form. But still, we can still trade it with the theory of market move from zones to zone. Are you getting me? Market move from zones to zone. Now, we'll go to the 4-hour time frame to see a clearer view of what the market is trying to do. Now, on the 4-hour time frame, we could see the market has retested. Market came back up, retested, came back to this trend line, came back here, came back to the trend line. Now I'm trying to come back to this trend line, creating a double bottom, a chart pattern again, a double bottom on the what, on the 4-hour time frame. Now as I saw this double bottom here, I was expecting a what, a push to the upside, at least a push to the upside. Are you getting me? A push to the upside. Now, but I found out something that, yeah, that double bottom, if that double bottom should hold, something like this will happen. If this double bottom should hold, something like this will happen. A breakout, a retest, continuation. That's what I will be waiting for. Once I see this, I'll be taking advantage of it. Once I see that, I'll be taking advantage of it. But something came to my mind also, that there's also a bad boy. When I mean a bad boy, I mean something like an obstacle that may stop it from going up. That is this little zone here. You see that little zone there has been tested severally. So that little zone may stop the market from going higher. But still, I will still be expecting a push to the upside. Now, that zone may hold it from moving up, pull back down to this trend line, then engulfing candle. That's what I'm saying. I'll be looking for a breakout, retest, continuation. Do you get me? A breakout, retest, continuation. So I'm going to be taking out this, putting at the back of my palm, at the back of my head or back of my palm, anyone, that there's an obstacle there. I'll take it out so that my chart will look nice. Do you get me? So this is what I'm looking for on what? On gold. But if gold should break this zone, the next zone my gold will be targeting will be this. All right, it's like I didn't draw this wall. I need to arrange this. This is supposed to be at least here like this to accommodate many touches. So, but as you can see, this was the one that touched its wall. So let me try just using the tip, align it to touch the tip. Yeah, that's what I'm going to use. So if market should break that downside, how am I going to be expecting to enter it? I'm going to be scrolling to the lower time frame. Once I see a 4-hour breakout of here or a daily breakout of here, bearish engulfing breakout of here, I'm going to be scrolling to the 1-hour time frame, wait for a pullback, continue to this target here. First TP will be this one here. Do you understand? Because I'm a little concerned about that, but still I'm going to be using as low risk as I can, because the tradable opportunities on this place, it is not that clear. That's why risk management is always an edge. I don't know how I'm going to explain this to you, but risk management is more powerful than technical analysis. Risk management is more powerful than the technical analysis and than the technical analysis that you are doing. So I'll be expecting this to break. 50, this is just 50-50. I can't just say I'm 80% sure about the buy of this. But if the double bottom of this could look, you could see market is reacting on this zone severally. It came here. If that this was like that my zone, that my blue zone, you see that it came here, touched it one, touched it two, reacted again, touched it another one. Now it's touching it again with this wick, all this wick. You see me? You see what I'm trying to say? So if this double bottom should be respected, I'll be expecting this. If I could see a breakout of here, a 4-hour breakout, then I will tell you, I'll be saying I'm 80% sure about the buy of this. At least next target should be the next black zone. You get me? Next target should be the next black zone. So I'm through for the analysis. I'm through analyzing gold at the moment. So let me be going to S&P 500. On my last video, I analyzed S&P 500 and I was like, I want a further push up to the next zone, then at least before I will start thinking about a selling opportunity. So on S&P 500, what am I seeing on S&P 500? Now S&P 500, first thing first, top down analysis. Now on S&P 500, I could see that S&P 500 have been creating a higher highs, higher lows, higher highs, higher lows. Now, what I was seeing here on the monthly time frame, that S&P 500 is what bullish. S&P 500 is what bullish. So, but we could see that anytime S&P 500 creates a more steeper pull to the upside, we must see a fall. So that is the same thing trying to come here. So therefore, S&P 500 is eyeing this zone here on the monthly time frame. Do you understand? Because this push to the upside is looking so steeper. Like, you get me what I'm trying to say? It's not as matured as this pullback. Do you get what I'm trying to say? That's the idea I want you to have. Now, on the weekly time frame, what can I see? No, I'm not customizing anything. Now, on the weekly time frame, remember I said on the weekly time frame, this is where we come to check for chart patterns. You understand? So this thing is looking like a left shoulder, head, then maybe a right shoulder is trying to form. This thing that is here will try to likely hold this thing from moving back down. You see, when S&P 500 created this bearish engulfing candle, everybody was thinking that S&P 500 will soon start selling, blah 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 blah. Who went up? Who killed this? Blah 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 blah. But what do you see? It went back up. You understand? So this may likely hold again, creating the right shoulder. That is on the weekly time frame, though that one is under probability. So let's try on the monthly time frame. We saw S&P 500 is bullish, so we are going to be doing what? Counter trending, trading against the flow of the market. Now, still we are going to be using adequate risk management. You get me? Anytime you have concerns, always use risk management. The risk management, if you're always trading using 10% of your account, reduce the risk to be at least 5% because of your concern. Now, going to the daily time frame, where we'll be trying to find opportunities to counter trend this bad boy. What are we seeing? We could see that market has what? Market created a double top on the daily time frame, showing us a reversal pattern eyeing this this next zone, this next part here. Remember I told you on my former video that market is eyeing this other first TP. This now first TP has been smashed. Second TP is what? This. Second TP is this. Though I didn't take advantage of this. I didn't enter the trade because my entry and exit strategy was not met. I'm not that kind of a trader that rush. I don't rush. I take my time. So on the daily time frame, what can I see? I could see the market has broken the first TP. You understand? Looking nice. The candle is looking nice. You get me? The candle is looking nice. So, but still, I'll still be expecting a pullback. A pullback. Like, let's go to the 4-hour time frame to clarify. Let's see the wider view of what the market is trying to do. Remember on my previous video, I said that S&P 500 will come back to this zone. After coming back to this zone, this was like a manipulation, coming back now. But I was expecting something like this. At least I was expecting S&P 500 to come here. You understand? Retest back, come back, retest again, then maybe an engulfing candle. I would have said I would have entered this trade. But S&P 500 did not do something like that. As you can see, the market always like doing its thing. It cannot do exactly what you say it will do. You're a reactive trader. You understand what I'm trying to say? Be a reactive trader. React to what the market is doing. Now, so how am I going to be taking advantage of this right now? How am I going to be taking advantage of this? Remember that zone there you are seeing there is the neckline of the double top. And also on the neckline of the double top, we could see that it's also a Fibonacci zone. A Fibonacci zone. You get me? Those people that that took advantage of this, that said that this place here is a zone. They will be out, at least faked out, correct type of fake out. The market will fake them out, has faked them out. If you go to the daily 1-hour time frame, you see what I'm saying. The The 1 hour time frame did it exactly. You see, you see, they entered here as buy. Like those people using candlesticks as entry strategy, they will enter here as sell. Sorry, not buy. You get me? Enter there as sell, not buy. Stop loss here. First TP here. Second TP, the next zone. What do you see? Market what took them out. Market what took them out. So this is a clear example of what I'm explaining to you. Always be a patient and a conservative trader. Are you getting me? So I don't, if that I wanted entering trade, I would have entered trade around this part here. But as you can see, market came here, reacted, manipulated to shake out stop loss, and what came back down. Because there are some people that put their pending or limit here, stop loss at least here like this. Their stop loss may be tight, and what do you see? Took them out. Continue. Are you seeing? So I didn't take advantage of this because my entry and exit strategy was not met. They were not met. So I don't rush. There are many opportunities in the market. So how will I be expecting this thing to? What will I be expecting for this to do? Then before we enter, I'll take trade of this. I'll do nothing. I'll do sit and do nothing. Only when the market does something like this. Only when the market does something like this, that's when I'll be like, wow. Maybe it retest back to the trend line. It retest back to the trend line and continue. But still, I won't still take trade. I will just see. I'm not trading this pair at all. I'm not, because it's not giving me half. Remember I said that this video is taking long, but I'll still take my time. Now remember I said that Forex is classified into two: market analysis and entry and exit. I did my market analysis well and it's spot on. But the entry and exit was not met. Listen again. Forex is classified into two: market analysis and entry and exit. As you can see, I did my market analysis very well, and I told you that market will what come back down. But what the entry and exit strategy was not met. I'm not a candlestick and this thing. I use CTL break. If you want to learn it, you can chat me up. I'll teach you for free. I'm not asking money for anybody. Only watch I just say click that bell icon, like, subscribe, boom. But that's all, because I want my YouTube algorithm, like my videos, to go viral. That's only what I just want. So like this now, if for me I wanted telling you to enter this trade, I would have said enter here at the break of the daily time frame candle or 4-hour time frame candle, stop loss here, then take profit here. But you'll be risking very well. You'll be risking very big. And it won't make sense. How will you risk something as big as this? Short position. How will you risk something as big as this? It won't even make sense. If somebody see what you'll be risking, they'll be like, are you sure this person knows what he's doing? Are you sure this person knows what he's doing? Yeah, this is a 1-2. It's even 1-to-1 risk to reward. Very shameful. Very shameful. You get me? Very shameful. So I won't do anything on this trade. I will just let it be. I will go to another opportunity. Australia USD is giving me very nice vibes, and gold is also giving me a very nice stuff. Do you get me? Gold is also giving me a very nice stuff. So this is all what I'm saying on all these pairs. As you can see, these are my new watch lists. Each time I get a very nice opportunities, I delete out the older pairs out of my watch list, leaving only that pair that are making sense on my watch list. Because of what? Discipline. You get me? You have to be a disciplined trader. Discipline yourself. All this, you need them. Risk management, discipline, psychology, emotional control, this and that. You have to know them. If you don't know this, then you are not a trader. Go close your laptop, to move the money in your trading account, use it and go and buy something to eat. Flex. And forget trading alone. It's not for you. But Once you have the mindset that you want to learn it, you are willing to learn it gradually. You're not in a haste to deposit money in your account. You want to learn very well before depositing money in your account. Then you are good to go. So that's all what I'm seeing on this PS. If you like my content, please like. If you do like this content, please don't just like it. Go there, subscribe, click the bell icon, like, comment. Do you understand what I'm trying to say? And thank you very much. Let's have a nice day.